And welcome back, everyone, to another episode of Economic Preppers, where we're going to do a little bit different this week, a little bit of a lightning round, because we've really talked amongst ourselves, and the three of us get along. We do a lot of different things, and what we really find a value in is getting the other perspective of the other two. So Patrick and I are bringing a couple stories. Dylan's going to bring some in the future, and we're going to just talk about different topics that come up and just pass it around and introduce them. So I know Patrick has one that he wants to share, and that's a video from Joe Brown. So let me get that queued up.
Yeah, as much as like my wife and I talk all the time and trying to plan for what's happening it's been hard, right? Like we really have to plan about what we're doing with our family and our family budget and just to stay on top of things, because if you don't plan where your money goes away, right? And I saw this thing from Joe that really resonated with me in a way, because it seems like when the economy is doing well, I'm like having a harder time for some reason staying on top of everything. But when the economy is not doing well, it seems like I'm always doing the opposite of what everyone's doing. And here's what people are doing. And I didn't recognize that this was the metric. So take a listen to Joe.
Yeah, this is about 2 minutes long, so let's just listen to it, then we'll comment.
The credit bubble is beginning to burst. A devastating report was recently released about credit card debt in the United States. We're going to take a look at not only how much debt Americans have, but also the delinquency rates and also what interest rates are doing. And finally, how that fits into the broader credit situation overall and what's going to happen to the economy as a result. First of all, today, the US average credit card debt is almost $6,000. With millennials having the highest per demographic. The average monthly payment for credit card debt right now is $1,500, while millennials are at a staggering $2,400. Now, a couple of years ago, I told everybody, get a fixed rate mortgage because eventually your credit card debt will be larger than your mortgage. People called me crazy, but $2,400 is larger than most people's rent and mortgage today. If we take a look further into the pain that this credit card debt is causing Americans, we can see that 36% of people say that they have missed a credit card payment because they had to pay for food or groceries. And while almost half of Americans think that they'll be able to get out of debt within a year, it's important to note that 28% of people think that they won't be able to get out of debt for 5 years, and that 11% don't see themselves getting out of credit card debt within the next 10 years. The survey also found that almost half of Americans use their credit cards to cover basic living expenses. And the worst statistic they found overall, in my opinion, is about maxed out credit card balances, because over half of Americans have reached their credit card limit at some point, and almost 1/3, 29%, admit that they max out their credit card every month. So theoretically, if you've got $20,000,
like imagine that. I couldn't even imagine what it would look like where your credit card bills are more than your mortgage payment. That's a really terrible place. And when I look at that, my call out is millennials. What are you guys doing? What are we doing? Like, this should sound like a problem to you guys that are listening, does it not?
I think there's a couple things here, like that I think are nuanced and need to be, talked about. That was a great, presentation that Joe did, and he put that stuff together very, very well.
Yeah.
But one thing is saying the millennials have the highest credit card debt. It looked like that was just monthly spending on their credit cards. So one thing that could indicate is just that they're better at using credit cards, or they're more likely to use a credit card to pay for something than something else. And that can be a couple things, right? That could be fine. That doesn't necessarily indicate financial irresponsibility. You could be actually more financially responsible by using credit cards in certain situations. But it could also expose them to the temptation and the risk of putting something on their credit card and then being stuck with that high interest rate. So it is a double-edged sword there.
If you actually listen to Joe's, the whole video, he kind of goes into that. And please, guys, check out Joe, Heresy Financial. Yeah. He has really great content. But when you listen to the video, he further goes on to say that not only is that happening, but credit card delinquencies are going up. Mm-hmm. People's credit card balances are way more than they can actually afford. So it's showing it's not just that. They're using it more like their emergency fund is what the data presents. Yeah. They're not using it as a ways to preserve your purchasing power or to leverage yourself against risk. No, they're using it because they want to spend and they don't have the ability to afford groceries, because most people are saying they've missed credit card payments because they have to pay groceries. They've missed other payments because of groceries. So it doesn't seem like it is. It seems like as delinquencies go up, as they're tightening their credit standards, the story is what we think it is. People are stretched to the limit and they have nowhere to spend their money. Now, how you're spending money, sure, let's argue that maybe there's some things you can cut out of your spending, right? But on average, wouldn't you say that most of these expenses are legitimately needed, like power, water, groceries, gas? Like, by the time you're left over with whatever, sure, we might be playing with the last 5 or 6% in an unwise way, but most people don't have that room to play around with.
Yeah. Well, two things I wanted to add that I think are important to consider and be cool to compare this data with is one, the number of people and by age demographic with multiple jobs. Because I know from doing freelancing, doing my own consulting businesses and all of that, that when you start to try and do this side hustle, you end up buying and things and having expenses for different software platforms, things like, even if you're just like a freelance designer, things like Canva, that the average person wouldn't be buying. And if you're just getting started, a lot of people put that on their personal credit cards. And so then they're paying their freelance business expenses on top of other expenses to try to make more money to afford the things that they need. And that can get you sideways real quick. And the other thing that I think is important for all of us on this channel is the shift to moving towards non-cash payment systems and the ease in which that is available today. The number of companies and businesses that take credit cards. I saw a video today about some guy. He's in the UK, and he bought some strawberries and he paid with change, with coins. And he's like, "This is legal tender." And the store was a cashless store. And he's like, "I am paying you for these strawberries with legal tender. I am not going to pay you with a credit card. I'm paying with legal tender, and I'm taking the strawberries and walking out." And the employees tried to stop him from walking out of the store with like $2 worth of strawberries because he didn't pay the way they want. And I don't know the legalities of that, but something that we all need to be aware of is this overdependence on, a cashless society. I know, Patrick, you've done interviews with G. Edward Griffin on cashless societies and the dangers of that.
Yeah.
That's becoming more and more. And so that'd be cool, interesting to see all this data combined with those things.
Yeah, just to build on what you said there, Dylan, I think that the same thing. This is the financial system is built on debt. That's how it's built. So a lot of people look at credit cards as their safety net, and now they have to bring that into play. Plus, with the millennials, it's going to get even worse because of the student loan payments that are going to pick up again. So it's only going to get worse from here. So it's painful, and this is what we all predicted, what we think was coming, and now the numbers are bearing that out. So it's a great point that Joe brings up, and thank you for bringing that to the show, Patrick. And
You're welcome.
He didn't know how to react. Well,
that's why I like showing Joe, is because the first 1 minute and a half of his video, I mean, he pretty much says it all. That's why I just was like, here you guys go. This is why I like Joe, because I think it's just important to understand as you're going down the grocery aisles that that's part of the game. They want you in debt, and don't recognize that that's part of the game. Figure out solutions to get out of it. Prioritize your budget. Figure out how to do a side hustle if you have to. Figure out how to invest in things with what you do have and make it work. But don't fall victim to this debt slavery system that's going to, just keep you down. It's just not good for your heart.
Well, this next story that I wanted to share, Patrick is actually going to kind of lead it off, but I'm going to turn it to Dylan very quickly. So this is a tweet that Patrick threw out there earlier this week. Response to Jack, who was also at the Silver Symposium. Great job as always, Jack. But Cointelegraph started this craziness, which by putting out news that wasn't true, because I guess they hadn't done their research, whatever, but they wanted to be first. Breaking news: the SEC approved. And
wait, Jeff, if you click on that, will it actually let you go to the tweet? Because I thought the tweet was deleted. They deleted the tweet. Can you click on the actual...
I'm not going to try and break this right now because I don't want to mess up the video.
I couldn't find the tweet. They deleted it.
But now you can see where to find it. If you find Nobody Special from October 16th, the tweet is still there. But now if you click on it, I don't know what will happen. I'll try it when one of you guys are speaking. But Patrick found this, tweeted out, and this is the spike to 30,000 that happened earlier this week. This really was the impetus that brought 30,000 up to or Bitcoin up to 30,000. So I'll turn it over to Dylan to speak towards this. Then I'll try playing with that tweet next.
Man, so this is I woke up, I was like, what happened? And the price had spiked, and then I was about an hour late, and it spiked up, and then it already went back down because of people found out it wasn't true. I think this is when people talk about the market being manipulated, this is a prime example of that manipulation. And I don't know everything that went on behind the scenes there, but to make a mistake this big as a company like Cointelegraph, it's very suspicious, and it's almost like someone was testing the waters or someone was trying to shake someone out of their position. And so it also speaks to the
You
desperation
know the
that people
origins of
have.
the story, right?
Was
Where
that?
it came from. You know the origin of the
No.
story, where it came from?
No, where'd it come from?
Cointelegraph tweeted that out because they have a Cointelegraph private Telegram group. And in the private Telegram group, somebody said that they heard on Benzinga's chat squawk box. So they posted it back into the Telegram group. The person didn't do their due diligence, sent it out. And then once they realized they effed up, that person left the private Telegram group.
Yeah.
I mean,
Yeah,
it just reeks of manipulation. I mean, and just to know that you could do this, like we're talking about there's a lot of money at play here, right? And so if you're a big player, why wouldn't you have basically plants to where you can just activate them, or you can say, hey, I want you to just leak this information. Like this stuff's been going on for forever about people leaking certain information, certain channels, and seeing who talks where and who does what, seeing if you can move markets. A guy named Ryan Holiday, I think he wrote the book Trust Me, I'm Lying. And he talked about a lot of the campaigns that he would do, and about this this system that these media companies would have, where they'd fabricate a story from a small article or a small source, and then they would just like keep repeating that story going on to get their desired impact or their desired reach from the message they wanted people to hear, even if it wasn't legit, because then the message they wanted people to hear was out there, and then they'd issue a retraction afterwards after no one was paying attention.
Oh, that reminds me of like the marketing campaign for Maytag. And I remember I used to get Consumer Reports and look at what appliances did well. And it shocked me that Maytag was the worst. They were like at the bottom of it. And they had that campaign of the Maytag repairman is never busy because their machines run so well. Pure marketing. None of it was true. So, but this story itself reminds me of, I think it was, Patrick, you probably remember, it was 2017, I think December, it might be 20, I think it was 2017 December, where Bitcoin Cash showed up briefly on Coinbase, and then was an hour later it was gone. It like spiked and skyrocketed, and all of a sudden it was gone. And again, it looked like another test. So, Patrick, do you remember that?
The Bitcoin Cash spike, that was like way early on. That was 2017, somewhere around there. It went to like $9,000 or something stupid like that.
They shut it down fast.
It was so funny because I was mining Bitcoin at the time and a little bit of Bitcoin Cash. And that's actually one of the reasons I got into XRP, because that spike was out of the ordinary. Like, you know, you always buy the rumor and sell the news. And when the news was Bitcoin Cash is taking over Bitcoin, and I'm looking at my warehouse going, but I'm not even doing that. Who else is stupid enough to be mining it at those prices? That makes no sense. It sounded fake to me. That was weird. And we still haven't seen Bitcoin Cash come up anywhere close to that since. It's been at like, what is it at today? 290, 280?
It's in that ballpark. It's in
basically
the 200s,
irrelevant.
I think. Yeah. Yeah, it's kind of more on par with Litecoin in the both in the use case and on the price range, but yeah, it's higher than Litecoin, but it's not as accepted. But regardless,
Bitcoin Cash sucks.
the point is that that was back when it was forking, and Bitcoin Cash was not going to be presented on Coinbase, and all of a sudden it was. Then it was gone in an hour because of that an anomalous spike where lots of people got some profit out of it. But it seemed to me like it was a test, which is reminiscent of what just happened this past week with ETF. I think we all know that the price of Bitcoin will go up when the ETF is finally announced, and that's what this test kind of proved. It's not a matter of when. It's a matter of when, not if.
Oh man, there's so much money sitting on the sidelines. Most people didn't even have time to hear that the news happened, much less that it was fake, before it happened. The news about it being fake was like almost immediate, in my opinion, because the price wasn't pumping nearly enough. And there was not enough money leaving, like the stock market wasn't tanking enough for that to happen.
The tweet is still there, by the way. So
let's breaking go on. SEC approves. I'm surprised that it's there because they changed it, they amended it, and now when you go to their Twitter page or their X page, it's not there. You can't find it there. All they have there is an apology.
I found it. So it is, the internet's permanent. That's what they say.
The damage is done. Some trader made some money.
Well, let's go on to Patrick. You wanted to talk about this tweet, staying with Twitter, about a little bit of FOMO.
Yeah.
From Wicked. Want to talk to this chart? This is a good chart.
Yeah. So as you guys can see right now, Bitcoin is dead. As it's going into its fourth halving, it looks like it's going down and may never come back up. It's crashing. No, it's right on track. It's doing what it's supposed to do. Bitcoin is on a parabolic trend, getting ready to go up. Guys, the halvening is coming. We're talking 170 something days away. We are looking for the halvening. And when that happens, look what happens every halvening. It doesn't spike every time. Kind of goes a little flat because it's priced in beforehand. And then what we're going to see here is this process over the next 16 to 18 months of Bitcoin getting ready for Christmas of 2025, where we're looking at that price range. And if you look at the top of the rainbow chart, I would suggest now with all of the activity going with ETFs, the billions of dollars sitting on the sideline in USDT or USDC stable coins ready to jump into another position. The election, the money printer that comes on with the election. I was talking to Alan Staples this morning, and we just are both looking at each other saying, this feels really familiar. This feels really strong. This feels like it's time. We have been waiting for this time to come. And here it is. Like, we are ready for this. The rainbow chart, yeah, looking at that, I could see the top end of the rainbow chart busting up for some reason. Honestly, I really, really can. In 2025, I could see us hitting the top end of that rainbow chart.
So
like, because we've never had that much volatility and that much pressure. I mean, the contractions are getting so volatile right now. The spikes are violent. We're going to get a day where Bitcoin goes up. And I remember this happened. What was it? 2021 when Bitcoin started going, it was like December. It was like at $20,000 at December 20th, like $25,000 on Christmas, like $30,000 by January. And it just kept going like $1,000, $2,000 a day. You guys are missing the point. The Bitcoin is leaving the exchanges faster than ever before. We are really, this is the supply shock. Supply shock, this is the one that I'm talking about. And you can see that it's really happening, not a derivative of a supply chain shock. This is really going to be a supply shock to the network. And I don't think we're never going to see this kind of money again happen so violently. This is going to be the halvening where I suspect most of the money will come in and most of the money will be made on this halvening, because there's going to be so many institutional investors and hedge funds and family offices and even regular people who just want to buy ETFs. They're going to look at ARK, at Cathie Wood. They're going to buy every ETF they can. And the question is will it ever come back down after a certain point? I'm not convinced that we'll ever see the cycle come back down again where Bitcoin retraces to its all-time high from the previous cycle. I don't think we'll see 60,000. I don't know, but it wouldn't surprise me if we never come back down under $100,000, because these hedge funds can't allow it for that to come down. They will buy more. And there is too much money sitting on the sideline. They will never let the asset price, the total asset value go down again. Once they're in, that's the new floor.
Two things real quick, and just to keep things moving along. But yes, I think when the big money comes in, they want the ETF because that's how the laws are written, where big money can come in through ETFs. Will it come back down? We don't know. But the point is that if we're arguing if it will get below 100,000 again or not, if we're right now we're at the 25 to 30,000 range. So if we're arguing that maybe it will only get down to the point where it's double from now, I think it's pretty obvious that you should be in this marketplace. Not financial advice, of course, but I mean, the upside is incredibly high, as we see from the rainbow chart and everything else. All the indicators are there that between now and 3 years from now, there's a big opportunity available to most everyone.
Let's just say it this way. If your financial advisor is not talking to you about Bitcoin, you should fire them.
Fair point.
Yeah. And the big thing is, like, you guys talk about this and the rainbow chart, and I couldn't see the numbers that were highlighted when it got to the red. But in order for it to hit some of these numbers, people are talking about 100,000, 200,000,
300,000,
right? That's like a total phase shift in the market. And this is something that Michael Saylor talks about, is like the fundamentals of the market will change in order to hit those numbers, because the capital that's required to move into those markets, it has certain barriers that are preventing it from going into Bitcoin. And once those barriers are broken down, those are pathways that not only will they bring initial capital in, but they'll bring even more capital, and the amount of capital flowing in will probably increase. And so then those will be sustained pathways into Bitcoin. And so when those sustained pathways open up to those larger pools of capital, the chances of them drying up and leaving completely go down.
Yeah.
Okay. So to move things along, because I know we're pressed for time this week, let's see. Let me go back to sharing, and let's go back to the big story, which we didn't really touch on, but it does link back to crypto. So I just want to highlight these stories, and I'll put the descriptions in the link. And if either of you want to chime in, feel free. But I'm going to watch my language closely, because we are trying to put this up on YouTube. So a certain group in the Middle East
They're terrible.
I didn't want to say that word.
Oh.
Okay. Okay. A certain all right, we'll edit that out. A certain group in the Middle East, they had their crypto accounts frozen. So there was the negative side, but also there's a positive side, same timeline, same story, where the conflict in the Middle East is now there's donations through crypto. So I think that's an important part to, like, they're trying to, there's lots of sides to this story, lots of things. I just want to present that there's two sides, even with the crypto conversation. Do either you want to throw in, Dylan, you want to talk about that?
I recuse myself from commenting because I think I'll get us in trouble.
Good.
I don't think I'll get us into trouble. The first thing I want to say is, if you read the headline of that article, it looks like they had accounts on that exchange. Again, this is the example we've seen time and time again, right? If for whatever reason, if it's true or not, you are flagged as an enemy of whoever has control, they can easily shut off your accounts or block your access to your funds. If you properly self-custody your Bitcoin, and this is something I talked about in a video about properly self-custodying your Bitcoin. But if you properly self-custody your Bitcoin, it doesn't matter who you are or where you are. No one can block access to your funds. Yeah, and I think that's something we preach on this channel all the time, and it's something that people don't fully understand, the dynamic, the change in just the relationship between the people that want to block access to your funds and you yourself who hold the funds that creates. Jeff, maybe you can pull up that video.
Working on it. 1 second.
Okay. So that's one thing I'll say that's most important, is understanding the self-custody of your funds. If you got your funds sitting on an account, and a lot of people do, if for whatever reason you're tagged as,
yeah, I had a guy come up after your talk and goes, "So you can literally hold Bitcoin in your brain?" And I was like,
"Yeah,
here we go, guys.
Yeah, play this video."
That gold brick. The reality is they can kill you and take it from you. Again, there's been examples of that throughout history of invading armies, invading empires, just going in and taking the assets and resources from an entity that cannot protect itself. But with Bitcoin, if that information, if those keys are in your mind and you've taken the responsibility to be self-sovereign and you've taken the right steps to reduce that risk, to know that if someone wants your Bitcoin, they can only get it if you give it to them. If you have a gold brick, someone else.
Open up those comments real quick.
In the middle of the
If you have a gold brick and someone else wants that gold brick,
hit the pause. There we go. So the first comment, guess account. I responded to some of these, but guess account hacking doesn't exist in your world. Well, if you have an account that can be hacked, yes, it can be hacked. But if you store your keys securely, they can't be hacked. They've never been hacked. There's no evidence of that. The Bitcoin
in his world, people don't break into your homes, I guess.
Yeah. Even if someone breaks into your home, right, you have to then give them the Bitcoin. It changes the leverage you have in that dynamic. Versus if they know you have gold in your home, they can take it.
That's the
Right. So
point. With Bitcoin, that doesn't happen. You could break into my home and ask my wife. She wouldn't be able to help you.
exactly. So you can set it up if you secure it appropriately, that the only way someone can get it is they have to get your cooperation and you giving it to them. And that
Yeah.
changes everything. People don't realize what that changes. But it's dramatic. And so if you have your funds on an exchange, you don't have your funds, not your keys, not your Bitcoin. And as soon as you're labeled as undesirable, you don't get access to those funds anymore.
Yeah.
Sounds
All
a
right.
lot like what they do with our Second Amendment rights, not to get us on a tangent, but kind of sounds a lot like what's happening there.
Well, I got one more story to share. So let me get that up here real quick. And I'm going to take it. Hopefully I got this right. There we go. So Patrick, I don't know if you've heard this story, but I heard this through another channel that I watch, that apparently 556 production at Lake City is no longer available to be sold to the populace. It's only
That's because
available.
Lake City produces the special rounds that are made for the military. And when you use Lake City ammo, you'll actually look at the back of the primer. It looks different. It's got like a sleeve on it. So what they're doing is they're getting ready to produce war ammo. That's
Okay.
it. It's just all it is.
I just wanted to point that out there because I know that a lot of our people are prepping in many different ways, including getting precious metals like lead. And this is 556 is going to be limited, and the price is going to skyrocket. So if you need that, you may want to go get some. So just
if you need the price, if you guys are looking for a good price on 556, if that's something you're interested in, shoot me a message, literally, because right now, like for an example, 556, if I'm buying a case of 1,000 rounds of 556, I just purchased last week, one case, I ended up getting 1,000 for like under $300. So you guys should not be paying this much, even for 9 mil. Like you shouldn't be paying more than $8 or $9 for a box of 50. What you should do is bulk purchase your freedom seeds and sow them among your community grounds.
All right, guys. I know this was a quick and rapid pace. I think we did a great job of covering a lot of different things. Dylan, any final thoughts?
Oh, man. Self-custody, not your keys, not your Bitcoin. Just find ways to be self-sovereign.
Excellent. Patrick?
Guys, take care of your family. Make sure you mention that, you know, prioritize them in your day every day, because hug your kids tight. You know, it's a weird world, and I don't want us to take for granted our friends and our family and our community.
That's a great message. And the general statement of be prepared and not scared, I think that's definitely out there. And I always rely on that one. But yeah, there's a lot of stressors out there. Take the time to smell the roses. Somebody else has it worse than you do. Just take a deep breath, work with your community. And, you know, if you've got stories or want to get our opinions on things, please leave a comment down below. Like, share, subscribe. We say that all the time. But if you have stories where you want to talk to us, reach out to us and we'll bring it on to the show next week. And we'll do. And if you like this rapid fire format, we'll adopt it a little bit more. So,
and also let us know if you need stuff too. Like if you've got stuff that you're looking for, like Dylan posted a great stuff on generators, or if you need Kevlar, or you're looking for some armor for some reason, like level 3+ protection, you know, those are the type of things where you want to know what you're buying and who you're trusting. So make sure that if you have questions, just be informed. Don't buy what everyone's selling you on Facebook, because I'm seeing a lot of my friends buy garbage because they have no idea what they're buying. They think they're getting good protection and it's garbage.
Yeah, we still have our book available out there that's on Amazon, still a bestseller, which is doing great. But if you want to vet kind of things or just be in a group of like-minded people, join our Telegram. It's free. You can just join us, talk to us, post things like, is this a good buy? We're in there virtually every day checking things. So it's a great resource. So with all that said, I hope you enjoyed this episode. We're going to read every comment and comment back. So like, share, subscribe, but be prepared and not scared. And we will see you next time. Take care.